Well, hello, welcome everyone. My name is Lori Berman. I'm Vice President of Membership and Development for the Small Business Association of Michigan. Thank you for joining us today for today's PPP webinar. The webinar is PPP status, updates, and a detailed walkthrough of PPP forgiveness. This is presented to us today in partnership with Maynard Costerison. Maynard is a great partner. We appreciate all that you do for us and with us. They're a member company, and they also happen to be our CPA firm. So thank you for being with us again today. We have several people online today. There are going to probably be a lot of questions based on the past ones that we've done. I would ask that when you ask questions today, please use the Q&A feature that is in Zoom. If you use a Q&A feature, our speakers today, Dennis and Sarah, will be able to answer those for you. Please keep your questions related to today's content. Please don't ask questions about other things. If you do have other questions on related topics, you can send those to sbam@sbam.org. We'll also try and answer those today, of course, during this webinar. If we're not able to get to them, you may send them there. I'm going to get the slides started here. As we do, I will turn it over to Sarah Jennings and Dennis Thies, and I can't grab your bios at the moment, so say hello and tell everyone just a little bit about yourself. Oh, and we will get the question. Yes, this is recorded. It will be on our site later today along with the slides. Let me get the slides going for you.
Thank you so much, and thanks for having us, Lori. We are excited to be here again. SBM is doing a great job at getting everything out there. So just very briefly about ourselves. So my name is Sarah Jennings. I am a shareholder in our Accounting and Outsource Solutions department. We have been working furiously to try to continuously update ourselves on all the changes with the Paycheck Protection Program, the forgiveness, the flexibility, and everything else. And I know Dennis and I have chatted. It feels like we're studying for cramming for exams all over again. So I am happy to be here. And Dennis, do you want to take a minute and introduce yourself as well?
Yes, thank you, Sarah. My name is Dennis Tice. I'm also a shareholder in the Accounting and Outsource department. And yes, this has been a lot of fun to go through all of these changes, and we're looking forward to today to bring you the latest and greatest, and with the understanding that it is as of today, and there'll be additional clarifications, and but looking forward to it.
Yeah, that's a great point. Every time we think that we're about set and we're pretty good with clarifications, as did last week. So Lori, if you want to advance slide, please.
I'm struggling to move it forward. Hold on.
Oh, no problem.
There we go.
Thank you so much. We are going to talk a little bit about where we stand with the Paycheck Protection Program. There is still funding available, so we want to make sure that we just kind of do an overview and make sure people know what's still available out there, basically what the rules are, what has changed in the last couple weeks, and what we continue to have some anticipation for some clarity and refining of some of the rules. Dennis is going to go over a very detailed walkthrough of the whole forgiveness calculation. I know over the last few weeks we've really been working with a lot of clients to make sure that they've got the information available so that they can hopefully get the loan fully forgiven, but at least have an expectation what that's going to be. And then of course we'll have ample time for questions. As Lori said, anything that we don't get to, we certainly will follow up afterwards. We'll work with SBM to make sure that we get those Q&As out there. Next slide, please. So just to recap, the Paycheck Protection Program is a loan based on 2.5 months salary and benefits over the last year. So once it's funded, and this is a big piece that we've been harping on really for the last 2 months, that you had 8 weeks to use the funds. Well, last week, 2 weeks ago actually, it was passed in one side. Last Tuesday or Monday, it was passed in the other side. Wednesday actually, and then last Friday the president signed that the Paycheck Protection Flexibility Act that extended the covered period to 24 weeks from that initial 8 weeks. We'll go over a lot of those details in the following slides, but I do want to say that the biggest intent of this was really to try to allow people more time to use those funds. I think when the initial CARES Act was enacted, that everybody thought this would be over in 8 weeks. So the goal was to get people the money, get employers the money to make sure that they could keep people on their payroll. People weren't, burdening the unemployment system that couldn't handle it, and that they could use that money in time to reopen. Well, what we found, obviously, the coronavirus, COVID-19 lasted longer. The stay home, stay safe, order throughout the country, not just in our state, lasted longer because we really had to make sure that things were on the decline. Because of that, they just revisited things. So again, once it's funded, you've got 8 or 24 weeks now. You kind of elect to use the 8 weeks still, but to use the funds for payroll. So they do have an alternative payroll covered period, what that was, there was a lot of question when this first came out. When does my period start? If my first payroll isn't until a week after my loan gets funded, what does that mean? Do I lose a whole week? Well, they have said for payroll in particular, you can use an alternative payroll period so that you can start your 24 weeks. I'm going to catch myself over and over again, not saying 8 weeks, but you can use the 24 weeks starting from the first payroll after you are funded. So that is great news. Benefits, obviously, you've got your employer covered health insurance, you've got life insurance, things like that, as well as state unemployment taxes. Rent obligations, mortgage interest, prepayments are not forgiven. That is one thing they did clarify in the last couple of weeks. And then utilities. And then, as we've discussed in the past, utilities is the obvious ones, electricity, water, heat, things like that. But it also is, thank you. But it also is transportation costs and things like that. So there is still some wiggle room, or I guess some haziness around the word transportation. It hasn't been completely clearly defined, but what we believe it is fuel for company vehicles and things like that. Next slide, please. So where we stand, I think it's really important when we look at things to say where we stand. So there is money left, like I said at the beginning. So right now there's over 4.5 million loans that have been issued. $511 billion. This, I believe, is as of last Friday. Over 5,400 lenders are out there that are able to provide these loans. If you aren't able to find a loan, I know SBM has done a great job at really trying to connect people with the right lenders. The Paycheck Protection Program, Michigan.com, has tried to really help people throughout the state of Michigan. But the SBA website also has a link that you can go to find an SBA approved lender. This is important because there is a time when we're not going to be able to apply for this anymore. And there are additional lenders coming online every day. I think that's slowing down a little bit, but certainly when the second round of funding was put out there, there were a lot more lenders that were coming on board, and it was a lot easier for people to find lending. One of the things that we did see was the first round of funding obviously was depleted pretty darn quickly. The second round, however, has stayed out there. Next slide, please. So there is still some time if you have an organization that is looking at reopening, looking at how you're going to fund some of the employee costs. There's still time to get that money. So the other thing I think is important, and I won't go over this slide, I just think it's interesting, depending on what industry you're in, to really look at who's been taking advantage of the Paycheck Protection Program. Obviously, we know, healthcare and social assistance programs, companies are going after the funds as they should. There is a lot of need out there, but I would encourage you to just take a look at this list. Look at what industry you're in. If you haven't applied for the loan, or somebody in your industry, we want to make sure that people know that this is available across a broad variety of industries. It isn't just retail. It isn't just restaurants, food services. Everybody right now is impacted by COVID-19, and I think we've reiterated that enough. Next slide, please. But we do want to make sure that you are always comparing things and making sure you look. So again, where do we stand? So in Michigan, we have received over 114,000 loans, $15.7 million. The average loan size right now is $113,000. I like to point this out because I think there was a lot of misconception in probably at the end of that first round when SBA came out with some additional guidance to make sure people were really reviewing that certification. I think there was some thoughts out there that there were some of the wrong organizations getting this money, or unintended organizations getting this money, companies that were too big that were finding the loopholes. But the average loan size is 113,000. So I think that really shows that the right target is being hit. I mean, the small businesses that would cover 2.5 months of payroll and benefits. As I said earlier, there's over $130 billion that is remaining in the funds to be issued. So if you or a colleague or a business, a sole proprietor is struggling right now and you haven't applied, it is not too late. As I mentioned earlier, Paycheck Protection Program, Michigan.com, I know is a program that the MICPA worked very closely with SBAM, the Michigan Bankers Association, to make sure that throughout the state of Michigan, we're getting the word out and providing resources as we can. There's a lot of volunteers out there, along with SBAM's amazing resources, to make sure that your questions get answered. The one thing that came out last week also is that it appears as though applications will only be accepted through June 30th. Now, I'll be honest, and I've read this in articles, I saw discussion in Congress last week, but I haven't seen it actually written down. I haven't seen it in the act or the legislation. So I do think that there's some clarity that we're still going to be getting around this. But last Wednesday, before Senate finally pushed this through, they had discussions before the Flexibility Act was passed. They really wanted to make sure that the funds, the final SBA loans, were done by the end of June 30th. So I just wanted to put that out there. Again, I think we still have some clarity to gain around that. Next slide, please. Okay, so I said that a lot happened last week. So last week, the Paycheck Protection Program Flexibility Act was passed. Again, it was enacted on June 5th, so that was last Friday. It was signed into law. What it did, it increased the maturity period from 2 to 5 years. So this is any amount that is not forgiven on your paycheck protection loan. For a long time, we were saying it's still a 1% loan over 2 years. Well, now it's a 1% loan over 5 years. The one caveat to that is it only applies to loans that are created after June 5th. If your loan was already in existence, you'll have to work with your lender and renegotiate the terms of that loan, because they do have their traditional loan documents that they'll have to work through. I haven't seen, because it's relatively new, obviously last week, I haven't seen a lot of feedback from financial institutions to see just how they're going to handle this. If it's something that they're going to do across the board, they're going to wait till forgiveness is calculated, but that is something to keep in mind. It also extended the covered period from June 30th to December 31st of 2020. So this will be important to remember when Dennis is going through some of the FTE calculations, the forgiveness calculation, because instead of looking at that rehire period and having that final date of June 30th, now that rehire period is extended to December 31st. So again, a very important detail and very beneficial to business owners. The other thing is it extends the covered period from 8 to 24 weeks. I mentioned this earlier, so it really is intending to try to help those businesses who have been closed, so they couldn't operate. They didn't feel that they could bring their employees back, and it's really trying to get the money to those organizations, those companies that need it when they need it, or at least extend the allowability to when they need it. I do think that hopefully over the next couple of weeks, especially within our state, as businesses start to reopen and people are really reevaluating their cash flow, even if they didn't apply for those funds, you know, a month ago because they weren't open and they didn't see that they needed it, now might be a good time to reconsider that. Look at those certifications, ask questions, make sure that you're looking at your cash flow projections through the end of the year and really over the next 18 months or so. The other thing that is very, very significant is it decreased the required amount of your total loan from 75% to 60% that had to be used for payroll costs. So if you remember, we've gone over and over and over. The MICPA has gone over and over and over through the town halls that SBAM has done, that you had to use 75% of the total funds for payroll, or you would get a reduction in your forgiveness calculation. Well, they've looked at that and they've reduced the required amount to 60%. There was clarification over the last week. It doesn't look like it's going to be a cliff. I know I saw some communication out there that speculated, well, does that mean it's all or nothing if you don't hit 60% of the total of your total loan amount being payroll? Does that mean you don't get any forgiveness? It doesn't look like that's the case at all. It looks like that's going to be handled the same way. So it's just a percentage decrease if you don't hit that 60%. But again, you've got now 24 weeks to use 60% of your payroll, of your Paycheck Protection Program loan for payroll costs. The remaining you can still use for the other allowable costs, such as mortgage interest, rent, utilities, benefits. The other thing it did is it increased the repayment deferral from 6 to 10 months, or when the forgiveness is determined. So there was a lot of concern because the forgiveness isn't required to be fully determined for quite some time after you get the loan. So there was confusion as to how that was going to work if you had to start making payments in 6 months, but you didn't really even know how much of your loan was going to be forgiven. Well, they've extended that to 10 months, which covers the period in which lenders have 60 days to evaluate your application for forgiveness, and then the SBA has another 90 days to evaluate that. So that is a great extension as well. The next thing that the Paycheck Protection Program Flexibility Act did was it allowed you to take advantage of the employer payroll tax deferral even after forgiveness. So when the CARES Act was first passed, it allowed you to take advantage of the FICA federal payroll tax deferral until your loan was forgiven. Now they've said you can actually extend that through the end of the year. And again, the employer payroll tax deferral is deferring, not taking away the liability, just deferring that liability. So you owe 50% by the end of December 2021, and the other 50% by the end of 22. Next slide, please. The next couple things that it did was it allowed for some leniency in the FTE calculations. And I will say we have seen SBA provide some clarification and some additional guidance over the last few weeks, and they really are trying. I think that all the agencies are trying to work together to really provide as much forgiveness as possible, because there was just so much vagueness, I guess, in the initial legislation that it was just up for a lot of discussion. Well, they have changed, as I said earlier, the rehire date for safe harbor from June 30th of 20 to December 31st. So that allows those organizations, those companies that haven't been able to open, to rehire and have that safe harbor. I know Dennis is going to go over that a little bit more in his forgiveness calculation. It also clarifies exemptions for FTE reductions due to the inability to rehire employees or hire similarly qualified employees for unfilled positions. So what that means is, if you haven't been able to find a qualified person because somebody wouldn't come back to work because they were laid off, and you have been trying, you have posted the position, you won't be penalized for that reduction in FTE. They already had said that the SBA had said you're not going to be penalized if you have a retirement or something like that, and the reason the person is no longer, the FTE is reduced, because it has nothing to do with coronavirus, has nothing to do with COVID-19 or closures because of all of the stay home, stay safe and some of the restrictions. It has nothing to do with that. There's a lot more leniency in there. The other thing, and I anticipate we will get additional clarity on how this is going to be judged, but it also provides some exemptions if you have an inability to return to the same level of business activity as you were at on that date of February 15th by December 31st because of your compliance with the Department of Health and Human Services, the CDC, OSHA. So that means, or the state. So if we aren't allowed, for example, a restaurant isn't allowed to be at 100% capacity, your business activities aren't going to be at the levels as they were in February. So they're saying, if, because the CDC says that you have to have all of these extra social distancing measures in place and you no longer can get back to those that business activity level, then they're going to provide some leniency and some flexibility in those FTE calcs. So I think all of these things are really, 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 really important to keep in mind, and they are great, great for business owners that have the Paycheck Protection Program. Next slide, please. So there are a few things that we have, and I put on here issues. It's really just waiting for guidance. So we usually have some slide that says we're waiting for guidance or we're waiting for clarity. So the biggest thing right now, I think, that, and there's a lot of commentary on the deductibility of the forgiveness expenses for tax purposes. So when the CARES Act was first enacted, there was a lot of talk about whether the forgiveness amount was going to be taxable as taxable income. That was said, nope, that's not going to be taxable pretty quickly. So we were excited about that. Well, then the IRS came out and said, well, wait a minute, it's fine. The forgiveness revenue, the income isn't going to be taxable, but if you are going to get that benefit there, then we're not going to allow you to also deduct the expenses that you used or that you were forgiven for as deductible business expenses. So, you know, to be honest, that's still going back and forth. We're waiting for clarity. We're waiting for final guidance. There's a lot of push that the intention was not to have that be taken away as deductible expenses. So I hesitate saying what my gut is, but there is a lot of focus on making sure that this isn't going to penalize business owners. The other thing that we've got still looking for clarification is if a borrower elects the 8-week period for the forgiveness calculation, can they still use the December 31st for the safe harbor calculation to have their rehire date? So they don't get that decline in the FTE calculation, but they have already used the full amount of the Paycheck Protection Program, and they can really be, aside from that, forgiven in that 8 weeks. That isn't clear. I don't anticipate that would be an issue. I don't think they're going to make you wait the full 24 weeks if you have used all the funds in 10 weeks. I think that's one of the questions that we had out there. You're not going to have to wait till the end of the 24-week period. We don't think, again, assuming the SBA has had enough time to reissue the forgiveness application, the one that's out there right now, everything is stated the 8 weeks format. So that is the next bullet point. We're waiting on that release. But I do think you'll be able to request or apply for forgiveness earlier. You don't have to wait till the end of that 24 weeks. The other thing is I think there will be additional clarity on independent contractor, self-employed. That hasn't been completely clarified. It wasn't actually even referenced in the Flexibility Act. So I think they will come out with some additional guidance on that. Just a couple other things for clarification before I turn it over to Dennis on the forgiveness calculation. So I know there were a couple questions in there about the $100,000 cap. So before, because it was an 8-week period, really you just took the $100,000, divided it by 52 and multiplied it by 8, right? For the 8 weeks, that's how much you could pay, whether it was self-employed or one of those highly compensated employees. Now it looks like they're probably just going to do the same calculation over 24 weeks. So that's, instead of $15,384, that's going to be $46,154. Again, it's just the max of $100,000 because you can include the payroll for those employees that are paid over $100,000. You can include only up to that $100,000 for both the application, but then on the forgiveness side, you can only include on the forgiveness calculation, again, up to that $100,000 annualized. So that would be $46,154. The other thing to just mention, so retirement is the other thing that we didn't have clarity on completely before. It hasn't really been addressed. It looks like most of the guidance they're saying is kind of the same calculation as I just went through with the $100,000. But if you have an annual profit sharing, so your plan says you only make those contributions at the end of the year, it looks like it's going to be 24/50 seconds of an estimated amount. That's the guidance. That's what we've seen a lot of retirement administrators advising. The other thing just to mention before we go on, and this was clarified a little bit, but incurred versus paid. So when we went through what is allowable with the forgiveness calculation, there was a lot of conversation about incurred versus paid. We talked about the alternative payroll, covered payroll period. So that extended your covered period from the first pay date after funding. So you still had 8 weeks from there. The other thing that has been clarified for things like rent, utilities, you are allowed to prepay your rent. So they're saying incurred and or paid. So if you prepay a month's rent, you should be able to get that covered. If you have something that was incurred during your 8 or 24-week period, but it isn't paid until the next regularly scheduled disbursement date or your next check run, that's okay, and they will let you include that. You just have to make sure that it's paid in that next regularly scheduled check run. I think that is all, like the overall updates. Now, Dennis, I think I will, next slide, and turn it over to you for the calculation.
Great. Thank you, Sarah.
Sarah and Dennis, I am able to see the questions, and we do have
Okay.
quite a few. Do you want to hold those, or would you like me to ask some of those now? We can hold them until you're done.
Why don't we just hold them from now? I think that what we'll have is a answering of hopefully a lot of those questions in this
Right.
in this piece of the presentation. So
Okay. All right, keep going.
if we can just weed through those as we go along. So the loan forgiveness calculations, I have 4 slides that I'll go over here that relate heavily to the existing forgiveness application that the SBA has published. Obviously, they have not come through and revised that for all of the changes with the Flexibility Act. So what I have done is I've gone through this process as if it is an 8-week period, and then what I'll try to do is relate to making a decision whether or not you want to use an 8-week period or a 24-week period. And I think hopefully that will help people as we sit here at the doorstep of the ending of the 8-week period for a lot of people or a lot of companies. Hopefully that will help in the decision-making process for what you actually want to do. And that, there's a lot of benefit that came out of the Flexibility Act. The unfortunate thing is that would have been really nice about 6 weeks ago. And so that takes away, some of the flexibility provided by that act. So everybody made different decisions or could have made different decisions as a result of that. But so where we'll start with the forgiveness calculations, if you're familiar with the application, this would be page 9, which are the tables to the Schedule A. Of the application. And this is an example of I think it's a medical practice, relatively small, and they have 7 total employees that were paid during the covered period. The first table, there's a bunch of verbiage that isn't on here, but it exists on the application itself, so I would encourage you to read through that. But above both of these tables, there is a description of who should be in that table and who should be listed there. And the first one, and this is a really unique thing, you should list anybody that generally was paid under $100,000 for 2019. But you have to look at each of their individual pay periods and say, if you were paying on a biweekly basis and you were paid anybody more than $3,846 in any of those pay periods, you have the ability to exclude them from the top table and include them on the bottom table. Okay, and if it's weekly, it's $1,923. But the reason that you do that, the reason that you would want to go through that effort is because of the last column, the column that exists to the right there, the salary and hourly wage reduction. If that does apply to certain employees, you can exclude them if for any of those periods you paid them at an annual rate of greater than $100,000. So it could have been a bonus period late in the year. They could be a commissioned employee and they knocked it out of the park, one particular month or what have you. But so that's an important distinction there. And then table 2 obviously is pretty much almost everybody else, and that would exclude, because there's a specific line item for self-employed individuals and general partners, that excludes everybody, or table 2 will include everybody except for the people in table 1 and those self-employed individuals and general partners that has their own line. I'll point that out later. So as we look through the actual activity on the slide here, you just list out by employee, the individual, the compensation that was paid in the covered period. Now, again, just to remind you that this is drawn up as an 8-week covered period. Clearly, the numbers should be larger on average, for a 24-week period. So keep that in mind. Then we list out the FTEs as they were during the covered period, and then that salary and hourly wage reduction. The example here is, Dave Brown was a salaried, or is a salaried individual, and he was being paid $6,000 prior to the COVID-19, or in the first quarter of 2020. But we decided as the employer that we could only pay him $4,000 for that, for his full-time work during that period. So going from 6,000 to 4,000 is a 1/3 reduction in his compensation. That's more than 25%. So you're going to have some salary reduction there. And so in essence, 25% of 6,000 is $1,500. And since we reduced his salary $2,500 more than $1,500, we have that $500 reduction there. Now, in my experience, I have not run across a lot of employers that are going to have this situation. But it may very well be prevalent for some employers, but usually it's a decision and it affects a lot of employees, or it's not going to be a factor. So we just have to keep that in mind. They've greatly simplified the way that calculation can be done. We don't have to do that comparing the covered period with the first quarter of 2020 on a pay-by-pay basis. You can do it on either a salary rate, what they're being paid on for a particular period, or you can do it on an hourly wage amount. So if you were paying somebody $15 an hour before and you didn't reduce that more than 25%, then that employee should not have any salary reduction. And it doesn't have to be on the total amount that they were paid within those respective periods. Okay, so you can, for hourly employees, which is where it usually affects a lot of things, you have the ability to look at their wage rate, and that determines if you didn't reduce that by more than 25%, then there shouldn't be anything in the salary and hourly wage reduction column for that individual employee. Keep in mind that if you cut them back from a full-time employee to a half-time employee, then you're going to have, there's going to be a difference that shows up in the actual average FTE column. So they clarified that, and it eliminated basically the double dipping that would have occurred had they not made that specific rule change. So if you're reducing their hours or their overall schedule from full-time to less than that, to part-time, you just list what their average FTE is there. If you reduce their wage rate, but not their work schedule, then it shows up in the salary and hourly wage reduction column. Near the bottom of the average FTE column, we have a 1 there. And that just relates to all of the exceptions to the FTE reduction that Sarah was referring to before, and as far as the specific employees. So I won't, that's somebody was fired, resigned, voluntarily reduced their hours, during the covered period. That would be one of those exceptions. The other one is they had been laid off. You gave them a valid offer to come back for the same pay, and they they physically denied that. That you need to have that both the offer and the denial in writing, and then you also have to tattle on them to the unemployment office within 30 days, or you know, that won't qualify. So that's what those exceptions are from. We just used an example of, we had one of those here. Now let's go to table 2. And again, these are employees that had their you know, their compensation for at least you know, one period during 2019 was over $100,000 pace. So at $3,846, the $1,923 on a biweekly or weekly basis, respectively. Now, in this situation, I do have both of these set at the cap for an 8-week period. But as Sarah said before, you know, the 24-week limit would be 46,000 and change. And this has not been updated for that. So it's possible you will not have a number here that's higher than the 46,154. But in this situation, it's an 8-week example, so it's a little bit lower. Both of those individuals working at a full-time basis, so this is basically your data gathering, you know, piece. If you go to the next slide, please. So the next slide is essentially the Schedule A, which is page 6 of the application. And I've reproduced most of the lines word for word here on this application, and just so hopefully it helps you relate the example to the actual application. I did that in anticipation of them not changing that, but there will be an update there certainly for the change in covered period and a few of the other things that we've mentioned. You know, lines 1 through 5 basically come from the 2 tables that we were just discussing. You know, the total payroll amounts, the FTE amounts, the salary and wage reduction, and then we bring in, it says non-cash compensation payroll costs. That doesn't mean that you didn't pay them. That it just means that those aren't payroll, meaning, you know, paycheck related. You know, they're the other, you know, the retirement, the health insurance, and state taxes that are allowable. We bring those in, and then we come to, and this is where on line 9 we talk about the owner, employees, self-employed. As we understand it, you know, this relates to, you know, individuals that are self-employed or have self-employment income. So, you know, it's general partners in a partnership. It's people that have Schedule Cs on you know, inside their personal return for, you know, their work-related activities. Those amounts are listed here, and as opposed to Table 1 or Table 2. So they're listed out separately. And then you come to the total payroll cost, which in this example is $67,270. It's important to note here, as we get into then what's the FTE calculations. If you look at the application, it's not included here, but it is very important because it isn't part of the calculation. But you have a question that basically says, if you have not reduced your employees from January 1st of 2020 through the end of the covered period, then you can check this box, and basically you put 1 in box 13, and you won't have any reduction to your to the forgiveness as a result of FTE reductions. Well, because you didn't have any, right? You know, you physically didn't have any, and so then you don't really have to go through those calculations on the bottom. That's not going to be very common. It will exist, but most employers did have a reduction in their employees during that period of time, and won't qualify for that. So, but just if you happen to be in that exception range, then just know that that's out there. But we'll continue with the assumption that you will have a reduction in the FTEs. Now the average FTE, so if we go to line 11, the average FTE, for your reference period. So you have your 3 reference periods, the 2019 reference period, the 2020 reference period, or the self-employed one. I won't go into details there to save some time, but that's that is your denominator here. Unfortunately, they set this up backwards, so your denominator is actually on top of your numerator, which is the next line, which is not the way, at least us math-minded people normally think about things. And then you have your, on line 12, you have your average FTEs, during the covered period, which is your numerator. And so you're bringing that in, that's lines 2 and 5. So we calculated that on the tables in the previous slide. And so that's 6.75 here, that is in our example. And that results in an 84 percent reduction. Keep in mind on the actual application, that'll be 0.84 or 0.844. It won't be a percentage. I just threw the percentage in there it's easier to think about it that way in my head, or present it that way. From a alternative, you got to keep in mind here, we have all of the alternative payroll period to consider. And I think this is where it comes into play as you're planning for all of this, or maybe reacting, later in the process here, which payroll would be better. I think building on what Sarah said before, there were so many employers that had reduced or eliminated their payroll until they actually got the loan proceeds. You can really pick up an advantage from that alternative payroll period in certain situations. So I highly encourage that you take a look at that, because you could have been at nothing or next to nothing, and you could have been at full employment, in that first alternative period, or the one that you could elect there, and it could make a really big difference if you're trying to go down the road of the 8-week process or 8-week covered period, as opposed to the 24 weeks. And I think that will be a true option for people in this process. So because you were planning on doing that. And now that you have the extension to 12/31 to get back up to your FTE counts, on February 15th, I think there's a true option to still use the 8-week period. If you go to the next slide, Sarah. So this is the actual forgiveness application, page 3. So this is where it all comes to, all those supporting calculations, are then utilized. You bring in your $67,000 of payroll costs. For the first time, we see the non-payroll costs, the mortgage, interest, rent, utilities. We bring that in. That's about $25,000 here, and we come up with. There's not a subtotal for that, but there's $92,500 in this example of payroll and non-payroll costs, total eligible costs that have been incurred. And then on line 5, we bring in the salary and wage reduction that we have, and we come to a subtotal on line 6 that excludes those wages. Okay, so those are the costs that you incurred that are eligible for forgiveness. We bring in our FTE reduction quotient from the previous page, again expressed as a percentage here, but it'll be a decimal, or it'll be no greater than 1. And then we come up with a potential forgiveness of $77,648. Okay, now we're not quite sure what the revised application is going to look like here, but essentially the only change that I've made between the previous application and or the existing application and with the changes in the rules are on line 10 there. You do have, we changed the 75 and the 0.6, or excuse me, the 0.75 to be 60% and 0.6. so that it's representative of the current rules. So the way that works out is you get to use the lowest of these three numbers. And the way that the 60% reduction comes into play now is that, you know, you basically divide your payroll costs on line one, that's 67,000, by 0.6. Okay, and that gives you roughly another $44,000 of expenditures here, you know, 45, and takes the total potential up to $112,000. But you still have to use the lowest of these numbers. And in this example, you know, that it shows the 77,000 as being the as being the, you know, obviously the lowest number. That would be about $42,000 of unforgiven amounts with a total PPP loan amount of $120,000. Now, I think that's more realistic in an 8-week example, and so again, I wanted to show that. But as Sarah and I were talking, you know, preparing for this, you know, with that 24 weeks, I'd say that you're going to be able to you know, spend these dollars, and you know, it's much more likely than it had to jam it into an 8-week period when you physically didn't have you know, employees in place. So you essentially pick the lowest of those three numbers, and as a result, you know, you just have to work it through the calculations and in your planning process in order to do so. They will have revisions to that. I just don't know what that's going to look like. It's kind of clunky, so hopefully they'll have a clarification there. And I got to get moving here on the remainder. So if you could go to the last slide, Sarah, or the next slide. This is basically the FTE safe harbor reduction, and essentially what it's designed to do is, if you can get back to the same number of employees that you had in your payroll that includes February 15th by December 31st. The only error I know in the slides at this point in time is step 4. That should say December 31st of 2020, not June 30th. I missed that one. Sorry about that. And but if you can get back to that, then that will allow you for full forgiveness. Keep in mind that it is an all or nothing calculation, just like it was before. So if you had 8 on February 15th and you get back to 7 or anything under 8, you are not going to qualify for that, and you'll have to go through the normal forgiveness calculation as it was on the previous page. So keep in mind, all or nothing. And with that, I will I'm going to cut that a little bit short so we can get to the Q&A. But that's the important piece of that.
Yeah, and just to clarify that all or nothing, it's all or nothing on the safe harbor, but it isn't all or nothing that you have forgiveness, right?
Correct.
Yeah.
Correct. Yeah. It's whether you can use the safe harbor or not. And you know, hopefully you can. Many employers will be able to with the extension of time. And so I think that's really, when you look at your options there, look to the viability of that option first, because it is clearly the simplest, as long as there's a business case to do it.
Thank you. And Lori, I think that last slide is just if there's any questions. So our contact information should, I forgot our disclaimer. So everything that we talked about today is as of today, as of our understanding. So as has been happening over the last couple of months, I feel like in the next 20 minutes after we get off this, there'll be some new interpretation that's issued that will discredit something that we say. But then the next slide is just for questions. So if you want to stop the screen share, and I know we've got a lot of questions. Some of them I think we answered. The first one I just want to clarify. So I did say when we were going through what is allowable for forgiveness, and I said insurance, life insurance is not, to my knowledge, included under the health insurance. What's forgivable? It's health, dental, vision, not life insurance. So I just wanted to clarify that. Verbally as well. Another question is mileage reimbursement for employees included in transportation costs, and everything I've seen, what we've been telling clients, it's fuel paid for vehicles that are owned by the company, used in operations, not mileage reimbursements. Do you agree, Dennis?
Yes, I have seen nothing that would allow that for that. Now, keep in mind, you still have a cost to report. So
Right.
you can still pick up something.
Yep. The next thing that we've got, has rent been clarified for business owners that own their building in another entity? So the rent payments, you just have to make sure, or what we're recommending our clients, and Dennis definitely expand on this, but what we're recommending is just make sure you've got the agreement in place. Even if it's owned by a related party, you can still include that rent payment.
Yes, correct. And then that's where the paid and incurred stuff might come to play too, especially with the reduction to the 60%. You
Right.
may be able to pick up another month of your actual rent to the building that you own, but it'd have to be either paid or incurred during the period.
Right. The next one is actually related to that paid and incurred. So Dennis, it says, I pay workers' comp once and expense it monthly. So I assume this would be considered prepayment and not forgivable. But given the paid and incurred workers' comp, how does workers' comp apply there?
So I've seen workers' comp cut out of a lot of different examples. But you're allowed to include state taxes that are calculated based on compensation. And I know in earlier examples, they included workers' comp, in that. I don't know if it's because of simplification or what have you that has been, but you're in the same boat as everybody else, or is that, it's paid outside of the period, or paid, once a year, or might not be paid within the 8 weeks. But you may be able to qualify for a sliver of that workers' comp. The real question is on the, now with the 24 weeks, is that even necessary to slice and dice that?
Right? Do you even worry about it? And I think all of this goes back to, a lot of it is going to come out on that application, the revised application as well, how that's going to be, where you're going to input that information. And I should have clarified also, so your first loan forgiveness application is submitted to your lender. So there is some due diligence that they're going to have to do, some discretion that they're going to have to do, how their quality control interprets some of this information, because they're in the same boat we are and you are. They're getting guidance from SBA and Treasury and everyone else as it comes out. So the other thing to keep in mind is the SBA has reserved the right to audit the information. They're requiring all borrowers to maintain documentation for forgiveness for 6 years after the loan has been forgiven. So just keep that in mind as well. So the next question we've gotten actually quite a few on this. For payroll, can we use the payroll over the 24 weeks, or is it 8 weeks of payroll within the 24 weeks? They've extended the whole darn thing to 24 weeks. So you just have more time to keep, using those funds for payroll. So I think that'll be really beneficial. The other thing that we've gotten a lot of questions on, and Dennis, this is my understanding, but a lot of it depends when the application is issued. Do you have to pick 8 or 24, or could we use it in 10? So if you use it in 10, that just means you're not electing to use 8. That means you've got 24 weeks to use the funds. Now, that doesn't mean that you have to wait till the end of a 24-week period to apply for forgiveness. You can apply for that as long as the application is open and your your lender is accepting those applications. You can apply whenever you have used the funds, correct?
Yeah, that's my understanding. Although anything I've seen on that is more clarification coming. That is
Right.
a lender's a common lender's interpretation of it, though.
Yep, for sure. Yep. The next question we've got, if we already received, and there have been a couple on this, if we've already received our funds, can we receive more? Can we apply for a second one? If we used it all in the 8 weeks and now we need more, can we apply again? The answer, unfortunately, is no. The application for the Paycheck Protection Program, even though they've extended the forgiveness over 24 weeks, it's still 2.5 months of your previous year's payroll. So that part isn't going to get you any more money. I think I mentioned again, so life insurance, no, is not covered. It's health, dental, vision, those sorts of things. We cannot ask for additional funds. Another one that we have, and I think we mentioned this as well, is payroll max extended for 24 weeks at the $100,000. So instead of the 8 weeks maximum. So that went from the $15,000 to about 46,000, just 100,000 divided by 52 times 24 instead of 8. So that is a good thing. Going down. So, Dennis, I think you had talked about this, but what would be the benefit of using the 8 weeks if allowed for 24 weeks of forgiveness? Why would you ever use 8?
You know, I think one of the scenarios, and a common potential scenario there, is that if you committed to pay your employees, even though there wasn't maybe a business need to do that, and it looks like your business is not going to be operating at full capacity throughout or at past June 30th, then you may want to, in that situation, consider using the 8 weeks, because if you just have to, then you can utilize the the FTE exceptions. And if you get back up to your 100% or as many as you had on 215, because one of the things that a lot of people aren't considering here is that, well, great, now I have more time to use this, so I can pay people less, and over that period, not pay people less, but I can use more of a business model of only using the employees or hiring back the employees that I need to have. Well, what the issue is there is that affects your FTE counts. And so if you are not going to get back to 100% or as many employees as you had on February 15th, by December 31st, then that impacts, if you were at 75% there, you had a $100,000 loan, you may not get forgiven for 25,000 of that. And, so it's a nuance, but I think a lot of people that, the flexibility was built in there because people were being hindered or having challenges spending all of their payroll dollars. Now with this, they don't have that, but just be mindful that you still have to pass those FTE calcs in order to, and the other calculations there in order to get full forgiveness. So you can't just say, great, I have more time to spend it on.
Right. Dennis, there was a question specifically on FTEs. So is FTE 30 hours or 40? And then I have a follow-up.
They did change that to 40. Yeah, I apologize for not mentioning that in there. There's also, so anybody that's under 40 is considered part-time. You add up all their hours, divide it by 40, and you come up with your part-time FTE. Anybody that works more than 40, don't count more than 40 hours, but you just count them as one. And then that's how you develop your FTE calcs. The
follow-up question to that, Dennis, is if your company's full-time status is actually 35 hours, are you penalized with regard to forgiveness because we're now using the forgiveness FTE is 40?
You have to follow the 40-hour rules. You'd be pretty close there, but you'd be in the same situation as you were before. So you have to use the same methods in those periods. So, if they were 35 hours before, essentially the math's going to work out the same. The other thing that we did not mention in there that does exist is there's a simplified method for counting part-time employees. And, basically you don't have to go through and count all the hours if you use the simplified method. You can just say, I have an employee, a part-time employee, I'm going to count them as a half. Okay, half a FTE for every part-time employee that you have. Now, where that can be an advantage is certainly from a simplicity standpoint, that can make things a lot easier. But if you happen to have as many employees as you did before, but you're generally paying less hours, you were paying, a lot of people 30 hours before, and now you're paying them 15, you can still count them as a half of FTE, and you can see where that could be an advantage where I'm paying less hours, and that would hurt me if I'm counting hours. But if I'm counting a half an FTE for them, then you may be able to get an advantage or relief there from that process. So, but generally it'd be in a situation where you have most of your employees working with you as you did in your reference period, but they're just working less for you. Definitely check into that option.
There's a couple more FTE questions. What if their employees are salaried at 40 but don't actually work 40?
You know, I think if you are if you're paying them as if they're a full-time employee, you can pay people not to show up to work. So I'll interpret that question as, we don't have enough work for you, but we're going to continue to pay you as you were full-time. You can do that, and so that you know, that person would count as one.
The next question we've got, so this relates to kind of the safe harbor. So if we reduce hours of employees while on the loan, but we restore all of those hours, so assuming they fall under the safe harbor, can we still consider the FTE equal to 1? But I think that goes back to the safe harbor.
So that's the last slide that I went over, and that's where 215 becomes very important. And that whatever payroll that 215 is included in, you do your calculations, your FTEs there, and if you can replace them by December 31st, then at any point in time in there, and this will be, you know, this will be the option that most people will go towards, because they may use this additional flexibility to, you know, reduce the amount of payroll they're paying and then just extend it out over a longer period if there's not a to physically pay them.
Right. Another thing to consider, we've got I'm sorry to rush you. I'm just trying to get through some of these questions. I know we're running already a little bit over. But one of the questions was, if we use the 100%, because I think this is going to come up a lot. Now we've got 24 weeks to use this. If we use 100% of it on payroll, do we even have to worry about FTEs? Can it just be 100% forgiven? And I think the answer to that is yes. You still have to pay attention to FTEs. And if you haven't changed your FTE count, then you qualify for the safe harbor. You don't have to worry about it. But what they're trying to make sure of is that you don't just fire everybody, pay one key employee everything, and get completely forgiven, because that's just not the intent of the program.
Yeah. So, I mean, what you really have to, you're going to have to, assuming that you're spreading this out over, you're spreading basically 2 months of payroll, you know, out over this 24 weeks, you're not going to be paying everybody that you were before during that covered period. So then you're going to have to go after the FTE exception, whereby you get back up to full strength, you know, have the same number of FTEs that you had on February 15th. And so be very mindful of that's a little bit of a risk here with having a longer period of time to spend it, is that you'll be paying less people, and then, you know, you have the risk that you won't replace those FTEs in order to get full forgiveness.
Another thing that we've got here is workers' comp insurance and allowable payroll costs. And I think we covered this, but I know it's a repeated question. So
yeah, you know, if it, there's different states that have different rules here. So if workers' comp is calculated off of employee, you know, wages or salaries or whatever, then you can include that.
Yep. And then one question on the FTE calculations, again, related to rounding. So when calculating FTE, do you round up or do you round down? 13.
It's to the nearest tenth. So there was some interpretation out there that there was going to be some rounding, like in the ACA rules. Well, they don't use the ACA rules for the FTE counts anymore. So everything that I've seen is you round to the nearest tenth and use that.
They let 2 more questions, and then I think, Lori, unless you want us to keep going, we'll try to wrap it up and respond as best we can to the rest of them after the fact. Does that make sense?
That's fine. It's up to you. Yeah. And thank you also for promoting the MICPA site, the CARES resources at micpa.org. They have been great at answering these too. So yes, go ahead. I can stay on as long as you can.
Okay, perfect. The one question I want to make sure we cover is profit sharing contribution from 2019 allowable? And again, we covered this a little bit, and it's gone back and forth because of the when people actually make the payment. Many organizations pay that 2019 contribution right now during this time period, during the covered 8 weeks. What it looks like, and Dennis, this is what I saw last, what it looks like is they're saying, well, not technically, you can't do that. You might pay it during this period, but what we're hearing is being advised from retirement administrators is you actually are going to estimate what your profit sharing, it might be a reflection of 2019, but estimate what 20 is going to be and take either 8 50-seconds or 24 50-seconds of that and put it somewhere, kind of reserve it, and that is allowable.
And I agree with that. And what I would add to that is that with the 24 weeks, you shouldn't need to embellish that retirement number, because if you are, then you're probably going to have an issue with forgiveness. You used all those funds for a big retirement contribution from the prior year, then they wouldn't be used on payroll, or pay the employees first, or include that compensation first. And with the 24 weeks, that in most employer situation, that should not cause a problem. You shouldn't say, okay, I can pick up this couple $100,000 from my profit sharing contribution from last year.
Right, and I think that's a really great point to just drive home again before we wrap up, is the whole goal of this Flexibility Act was to give people more opportunities for 100% forgiveness. So at this point, as long as you're using it for allowable purposes, 60% for payroll, 60% over 24 weeks, and your total loan was only based on 2.5 months. So, I mean, you've got a lot longer to spend that money. And then just make sure you're looking at the FTE calcs. One thing to keep in mind, and I promise this will be the last thing that we talked about, but I haven't seen, there's just a lot of things that we're waiting on clarity. Now that they did extend it to 24 weeks. It's unclear as to if you do apply for forgiveness at 8 weeks, if there's going to be monitoring, like if they just change the whole application. It's unclear if lenders are going to automatically flip you to 24 weeks and you have to verbally tell them or make an election for 8. The legislation says you can elect 8. So my assumption would be that everybody's 24 unless you decide to be lower. But we're waiting for clarity on that. The other thing, if you go to 24, you apply for, if you are under the 24 week forgiveness period, you apply early because you have fully utilized the funds. One of the questions is, what if we have to lay people off after that? Theoretically, there shouldn't be any reflection back on the business or on the organization after you've applied for that forgiveness. But because there's not a lot of clarity or guidance on the whole 24-week period, I want to reserve whether we can even answer that question right now. Again, the SBA has reserved the right to go back and audit. You have to keep all those records for 6 years. But at this point, it's all of the documentation leading up to that forgiveness. There hasn't been anything that said they're going to go back and look at companies after the forgiveness is applied for. Any final thoughts, Dennis?
Yeah, I think overall with this additional flexibility, I think it provides, employers with the ability to, there's less likelihood that you would have to play games with those numbers and issue bonuses or try to pull in all of these additional costs, because the time period is just so much longer that the way more employers are going to be able to spend those dollars within that time frame, and you won't have to look for all of these exceptions and things like that people have been planning for and looking at it over the last couple of months.
Well, thank you both. I appreciate you coming back to us. We often say it's like drinking from a fire hose, but it happens repeatedly, right? As we get new waves of clarifications and new documents. I have one question. I just wanted to circle back. Sarah, you mentioned that the current date is June 30th as the deadline, but there is some clarity possibly around that. Do you think it will stay at June 30th? Is that a staunch, or was there talk?
I gotta be honest, I don't know, because when it was enacted, they had said the CARES Act and the funding for Paycheck Protection Program was through December 31st. It was I can't find anything in the current legislation. That doesn't mean it's not there because it's relatively new. And I can't find SBA guidance that said they're going to stop accepting applications as of June 30th. But last Wednesday, when it passed through but right before it was signed into law on Friday, actually. So last Wednesday, there was conversations that they didn't want it to pass unless they stopped taking applications as of June 30th because they didn't want to extend the issue. So I just am telling people to, keep your eyes open.
Thanks for the clarification on that. And we'll dig into it as well. Go ahead, Dennis.
And just, you got a couple of weeks before that, the flow of those applications isn't the feverish pace that it was, in mid-April. And so just get on it and get your application in. They should be able to turn it around relatively quickly, and you don't have to worry about it.
Great. Well, thank you. Again, we appreciate your time. We appreciate the partnership with Mainer. You guys are a great partner for us. Sarah did mention the MICPA. It was a collaboration of people trying to get the information out about the PPP program. If we didn't answer your question, you can send them to us at sbam@sbam.org or to CARES Resources at micpa.org. Thank you again for being here. Can't appreciate it enough. And hopefully this is the last round of forgiveness discussion, right? Hopefully we've got it figured out, but I'm sure there'll be more. So, okay,
Great.
thanks, Al. Have a great day.
Thank you.
Bye-bye.